money is very important to society. It's one of the main drivers of freedom and control. Cash is permissionless and you're able to sort of use it up until the point where you want to move 10 grand across a border. Bitcoin is permissionless up until the point where you want to use it at a gas station. This is a very new game and we're here to innovate in the blockchain space. To say Bitcoin has won it all after 15 years, I'd say that is a very naive assumption. How are we going to disrupt traditional finance in a way that gives power back to users? How do we focus on that decentralization aspect? How do we make this as broad and as applicable to as many users as possible? We're going to innovate and partner with the ways that we can introduce crypto for payments, or ways that we can introduce it for decentralized physical infrastructure or real world assets. It exists on these other blockchains, but it's a little more feeble because they don't have that real property of security and they don't have that real property of that scarcity that is needed, similar to Bitcoin.
Hey everyone, I'm excited to share with you my conversation with Alan Orwick, co-founder at Quai Network. Quai Network is an incredibly ambitious project looking to create a new crypto-based global monetary system. They're a proof-of-work blockchain aiming to improve on many of the paradigms invented by Bitcoin, and by creating a more scalable monetary system without compromising on decentralization. Their project has seen investment from Polychain Capital, Alumni Ventures, 01 Capital, and many others. For those interested in digging deeper into Quai following this conversation, they have an incredible YouTube channel explaining everything about the protocol, as well as some great documentation on their website at quai.ai. So with that in mind, here is my conversation with Alan Orwick from Quai Network. If you've been in the blockchain space for some time, we've all heard this kind of understanding of the blockchain trilemma, right? You have speed, security, and decentralization. And it's kind of this like pick two of the three type of scenario. You guys are the first that I've heard that have spoken about a blockchain tetralemma. So why don't you talk a little bit about what that tetralemma is and how Quai is looking to solve it?
Sure. So we've analyzed the blockchain trilemma and we've seen how other layer ones have made trade-offs. Bitcoin being the most decentralized, but being slow, and it's extremely robust and secure. Solana being something that is more centralized, but it's a lot faster, still remaining on security. Security is the thing that you need in a blockchain. It's a financial system. If you threw security out of the window, well, you wouldn't really have much left because you could attack it from an economic standpoint. With Quai, what we've done is we've operated outside of that blockchain trilemma, and we've introduced that tetralemma, and we've done so by introducing global consensus and delaying global consensus for local consistency. And in this sharded topology that we utilize in Quai Network, we can achieve that local consistency within the shards, but essentially make the trade-off for however many shards there are, or the more shards there are, we can delay global consensus. So that allows us to increase the local throughput, but delay that global throughput as those shards coordinate with each other.
Interesting. And so I guess what you're, for lack of a better term, sacrificing is the global consensus at every given time that, you know, Bitcoin and a proof of work Ethereum would have relied on to say, let's make sure that our local transactions are extremely, you know, secure and always in consensus. And then if we need to kind of layer up and, I guess, calculate that global consensus in a little bit of a slower rate, we can do that.
Right.
Is that
if you look at
fair
Bitcoin,
to say?
Bitcoin has a block every 10 minutes, and that 10-minute block determines the global consensus. Sometimes it's even in 2 blocks due to Nakamoto consensus. So you can think of Bitcoin kind of just dropping these bombs every 10 minutes and saying, boom, here's a block with a bunch of transactions. Boom, here's a block with even more transactions. And so that has to be done in a way that all of the nodes have to understand and come to consensus on and agree on. And Bitcoin has a huge network. I mean, it's estimated that there's 200,000 Bitcoin nodes all synchronizing this data. There's various numbers on Ethereum as well and what Ethereum looked like in proof of work, but Ethereum was kind of closer to the idea of the trade-off at smaller block times. So there's the trade-off in block size that kind of goes back to 2017. Or you team big blocks or you team small blocks. And then Ethereum kind of showed what it looks like to have 10-second block times in a proof of work chain. So they were able to say, all right, well, we'll get sort of the faster consistency there and we can propagate fewer transactions at a faster rate. but they're prone to uncles, which is essentially competing forks in that proof of work consensus topology. And in Quai, what we've done is we've said, okay, well, we'll take a similar approach to both Bitcoin and Ethereum. So in Quai, we have a hierarchy of shards. So there's the prime chain, many region chains, and many zone chains underneath those region chains. And our testnet that we'll be launching tomorrow will actually be in a 3x3 topology. So there's 13 total chains, one single prime chain, 3 region chains, and then again, 3 of those zone chains per region. Again, a 3x3, you can kind of think of 3 regions and then 3 zones per region. And the prime chain actually operates sort of similar to Bitcoin, in which you kind of get these big sort of links that coordinate these shards every 10 minutes, 5 to 10 minutes. But those zone blockchains operate closer to Ethereum every 10 seconds. And there's many of those zone blockchains. So you can think of the TPS essentially dictated by how many zones there are, but due to those zones being merge mined into the prime chain, they can achieve that global consensus as they're woven into prime. We kind of think of those shards coming together as a braid. And so the more shards there are, the less likely they'll be included in the prime chain, which allows that global consensus to be delayed, but we're still getting those 10-second blocks in the zones.
Got it. So you're essentially taking the best of both scenarios, having quick block times, but also having extreme kind of security and decentralization. One thing I do have to say is the thing I love most about what you're doing is that there's in kind of unrelenting focus on decentralization.
Right.
And with some other blockchains we've seen is kind of a move from proof of work to proof of stake and kind of making those blockchains less decentralized at their limits. And that's just something that you guys are not compromising on. So maybe if we could talk a little bit about the difference between proof of work and proof of stake and why inherently a proof of stake blockchain just can't be decentralized at its limits.
Sure. So I'll start with proof of work. And proof of work is obviously the origin of Bitcoin. It's the origin of cryptocurrency. It's how we were able to get these sort of canonical hash links that can imbue a currency natively in the system. And then we've evolved into this proof of stake sort of hodgepodge of tokens. And it's sort of divulged into this subjective. And again, that's the kind of key thing is proof of work is very objective. You can look at the energy being put in, you can look at the mathematical properties, and you can see what the outcome of the chain would have been regardless of time. And time is a very important feature to Quai Network, or the lack of time is very important to Quai, but there is some properties of time in existing proof of work protocols, as I sort of alluded to with Nakamoto consensus, needing 2 blocks to resolve a fork or a sequence of blocks in Ethereum to resolve a fork. In proof of stake, though, you introduce subjectivity, which is there is no actual input cost to the system, and the actual weight of the blocks is dictated by social consensus and what people believe is the right output of the chain and what is being attributed to that perception of the inherent currency rather than something such as energy being put into the system. So for Quai, as you said, we have a very high emphasis on decentralization because in a blockchain network, that's sort of a default that you need, and you don't realize how much decentralization trends with the robustness of the system until you actually need it. So you don't need decentralization until your blockchain network goes down, and then you're like, I had that censorship resistant property and I wish I had full control of my assets. And so it's kind of that thing that you kind of forget about until it's a necessity. And we want to make no trade-offs there. We want to have the sort of utmost ability to provide that for both the users of Quai and the people building on it. The introduction of subjectivity into proof of stake was sort of, in our opinion, or in my opinion at least, a way to introduce forms of control onto a blockchain and onto what is inherently a network state of currency. And if you look at the transition for Ethereum from proof of work to proof of stake, you've sort of seen the sort of ever-looming conversations of it being a security more so, given the control of the network and the ability to influence both, say, like Lido or liquid staking derivatives, or people that want to sort of imbue it by, buying more of the token and influencing it that way. So there's a higher input cost to proof of work. And in the Ethereum example, you'll actually see them say, well, Ethereum has the best form of proof of stake, because it was proof of work, which I've always thought is a super interesting argument, because proof of work inherently has the best distribution mechanism, and then it also has the ongoing cost of competitive mining, ensuring your mining hardware is up to date, ensuring that you're consistently performing a service for the network, and it creates that divide between people that are inherently rent seeking versus competitively bidding to provide security for the chain. And I think that's a wonderful property of proof of work. Again, this is highly debated. Many people are going to have many differing opinions. I think there's valid takes on both sides. For Quai, we've seen just that objective nature, and then the sort of removal of time with the properties of proof of work being highly beneficial for our system.
Yeah, it's interesting. And you touched a little bit on mining and the energy inputs that go into mining. I do definitely want to talk about that. I just want to quickly touch on your version of consensus mechanism that you guys have created. So I believe it's an extension of Nakamoto consensus, but you're calling it POEM, or proof of entropy minima. Talk a little bit about how you guys come to consensus and how that new form of consensus has been formed.
Sure. So as I talked about with the removal of time, POEM allows us to look at a block and see the intrinsic weight, and comparing that to Nakamoto consensus, where all blocks achieve the same level of difficulty. So when you're mining a block, you have to hit a certain threshold, and then that threshold essentially is equal to all blocks at that number. So say we're mining block 200, and you and I both create a block. So one of these blocks is an uncle block, or will be forked out and not included in the canonical chain and not be mined on by the majority of the network. That block, from a hash perspective, is different from the other block that was mined, or the uncle block. And so we use that property and we say, well, those blocks are intrinsically different because from a mathematical perspective, 2 to the 256 of those hashes, one of those aren't going to be equal. One's going to be greater or less than the other, essentially, with the entropy minima as the reduction. So one of those blocks will have more leading zeros than the other one to some degree. And so we can say instantaneously, if there is a fork, one of these blocks has more leading zeros than the other. Therefore, it is the block that everyone should be mining on, and it is the canonical block. That has sort of a multitude of effects, because if you're trying to coordinate these top-down shards, you need to know the progression of all of those heads. You can kind of think about it as a three-headed hydra, all trying to make the next block in the blockchain and achieve that incidence. Well, we have to have that forward-looking knowledge of those chains, and then also be able to decide what is instantaneously best at that coincident block, which can only be achieved with this entropy minima guarantee in this property. Because if you were to have these coordinating forks top down, say a prime block forked, and then we had to wait for the next prime, well, that's 10 to 15 minutes, 5 to 10 minutes of indecision. And then those shards can't progress because of the indecision. And so you're kind of left with varying competing forks that would waste 5 to 10 minutes of finality, as opposed to having that instantaneous resolution through the entropy minima process and through that entropic reduction, to where we know at the time of production which chain is correct. And then,
Alan, Can I just ask on that point, is it also fair to say that this POEM consensus also reduces the ability of a hard fork? For example, like in Bitcoin, those were kind of exogenous factors that potentially could have put Bitcoin at risk in 2017, where we had these kind of block size wars. Also, if you look at Ethereum versus Ethereum Classic, we had these hard fork scenarios. Is it fair to say that this POEM consensus mechanism would reduce that risk entirely?
Sure. So that's a valid question, and I'll start on a few different points. So a hard fork essentially is not as much a division in the protocol itself, but a division in the community. And so there's existing hardware in which, given a hard fork, you're dividing sort of 50% of the 100% that already is existing on chain. And so if you were to split equally, one fork would have 50%, the other fork would have 50%, and they'd be operating at half the hash rate on both. And that's not something we can intrinsically control, because that capacity on the network already exists. So POEM itself sort of is agnostic of what the community decides. It's just from a technical perspective saying, here's how I can facilitate these blocks, come to consensus, and make that attribution for what the shards should do. In a hard fork scenario, though, it's going to be a lot cleaner, because you're going to know the decision and the discretion of that chain progression. automatically. And so you're not going to be left with sort of unwieldy forks that are competing and having that sort of different time to delay and having them compete on a certain uncle. You're going to get it to be very clean because you'd introduce the code change, and then everyone would know to go from there. And it's very clean in Bitcoin and Ethereum as well when you do those types of hard forks. But in Poem, again, that's sort of agnostic from the idea of the community deciding to do that. We are, from an attack perspective, though, so that kind of introduces, when you talk about these hard forks, well, you can also talk about sort of these long range forks or these attacks on what's the incentive strategy on Poem. And I can say we're performing a DSIC audit for that in order to say, well, the Poem outcome and the way in which Poem is mined by the participants on the network and participated in is the proper dominant strategy, incentive compatible sort of game theory design.
Well, one of the things that makes Quai so interesting and so ambitious in my eyes is that it's not a traditional layer one like Ethereum or Solana that's main goal is to have applications built on top of it and, kind of usage within that kind of ecosystem network. Really, I would say the closest comparison to Quai is Bitcoin. And Bitcoin really doesn't have a lot of competition in the crypto space in the form of kind of its use case as money. And really what you're trying to build is a new money system in Quai. We have Bitcoin. Why is it necessarily imperative to get to this new money system that's globally scalable?
Yeah, so money is very important to society. It's one of the main drivers of both freedom and control. So if you look at nation state issued currencies and the way that we transact on a day-to-day basis, you saw sort of Eric Voorhees talking at Permissionless this past week saying cash is permissionless and you're able to sort of use it up until the point where you want to move 10 grand across a border. And then Bitcoin is permissionless up until the point where you want to use it at a gas station. And so it's very, very hard to find this right trade-off of currencies and the right level of ownership and sovereignty for a user. So, we're very open to the fact that this is a very new game and we're here to innovate in the blockchain space. And the whole industry is very nascent. To say Bitcoin has won it all after 15 years, I'd say that is a very naive assumption. And even then, with the existing currencies that are innovating in the areas of smart contracts, zero knowledge, optimistic rollups, and other types of ways to create more block space, they haven't really found a way to utilize that abundance in a beneficial way for the users and value accrual over time. And so we've ended up in this place in cryptocurrency where we have, as you said, these dApps and these other sort of contracts and these shitcoins and these memes and these NFTs where they're fun to play with, but what's the real reason we're here? And how are we going to disrupt traditional finance in a way that gives power back to users rather than essentially these rent-seeking large estates that will tax and sort of ruin the value of their currency over time? The United States sort of goes into a fit when we have 10% inflation, but imagine these other countries that have 90% interest rates and 100%, 200% year-over-year inflation. That can ruin the livelihood of many people. And cryptocurrency at its core was this sort of cyberpunk, like, hey, we're here to try this new form of money, let's see what it does. And then it blew up overnight. To say crypto is a failure right now in the middle of a bear market, I think is a bit terse because we're still at over $1 trillion combined market cap. And I'd say that's a win for being 15 years into this new technology. And with Quai, we want to utilize a last mover advantage to say, okay, what are those same beliefs? How do we focus on that decentralization aspect? How do we make this as broad and as applicable to as many users as possible? We don't want to ignore smart contracts and NFTs and these new forms of technology that can allow for different types of ownership. But inherently, I think money was the main reason all of this was created. And one of the main reasons why people are so excited about it. And we may have lost the plot in some of those areas on some of these other protocols, but with Quai, I think we have a unique opportunity to refresh that idea and say, hey, we're starting from first principles. We want to use proof of work for these reasons. We know you have opinions on proof of work or proof of stake, but here's our belief and we're going to go with it. If you don't want to think about it or put any thought to it, that's fine. We don't need to convince you. We're going to create this project. And then we're going to innovate and partner with sort of the ways that we can introduce crypto for payments or ways that we can introduce it for decentralized physical infrastructure or real world assets. And these sort of other ways that it exists on these other blockchains, but it's a little more feeble because they don't have that real property of security and they don't have that real property of that scarcity that is needed similar to Bitcoin. And so, yeah, it's interesting to see sort of all those combined. It's cool to see where the space has evolved. I've been in the space since about 2016. So Quai has been a long time coming in and of itself, but as you said, I think money is the key driver for what we're trying to build.
Absolutely. And anybody in the crypto space owes a massive debt of gratitude to Bitcoin for, what it did to create the space, to introduce Nakamoto consensus to the world and this kind of new way of calculating digital value online. I think it is a really important point, though, to say that it was created 15, 16 years ago. And we have all these new developments and kind of new papers that have been written and new kind of digital primitives that have been created. And, it would be naive to say that we hit the final stage of what all of this digital currency can be 15, 16 years ago before any of this new research had come to light. So I think a couple of the interesting, problems that you're tackling with traditional Bitcoin is one, yes, the scalability on a global stage, and two, the energy consumption. So we could have this whole conversation about, the energy consumption of proof of work and why it's valuable, but also why it, might be somewhat wasteful. You guys have quoted to be 10,000 times more energy efficient than Bitcoin. So talk about how you guys are achieving that, and then also maybe talk a little bit about the energy inputs in Bitcoin and why that make it so valuable from a security standpoint.
Yeah, man. So we're here in Texas, so we're familiar with the energy grid after going down in 2021, damn near for the ice storm, and then now the summer with some rolling blackouts. We're intensely familiar with both Bitcoin mining and the energy going into Bitcoin at scale. So Bitcoin itself right now is 40% renewable energies. It's a 40% green platform. That's an audited thing. You can see Tesla saying they'll add Bitcoin back to their payments, and you can buy Tesla with Bitcoin when it's at 40%. We'll see what happens there if Elon decides to do that or not. But we have in Texas right now immense dispatchable load of Bitcoin miners. And when China banned Bitcoin in 2020, you actually saw those Bitcoin miners move from China to Texas and other various parts of North America. And I think that first sort of statement proves the reliability and the robustness at scale for a system like Bitcoin in proof of work. You were completely outlawed by enormous nation, and you were just as sort of reliable and trusted without any downtime, without any major hiccups in the system. All the miners just picked up and moved. And that is a beautiful property to me. The second being the energy piece. So in Texas itself, we have sort of major producers of oil, nat gas, wind, solar, and hydro sort of on our grid. And we have an isolated grid. And the Bitcoin miners can sort of get these PPAs or these purchase agreements to where they're buying energy at a fixed cost to mine Bitcoin and then reduce the volatility of that system whenever the sun's shining and your lights aren't on, or the wind's blowing and you're not, charging your car or some other sense. You're not selling energy back into the grid. And so for those Bitcoin miners, they can consume it. But whenever that energy is needed, say, whenever it's 110 outside here in Austin and everyone's running their AC, well, those Bitcoin miners aren't actually mining Bitcoin anymore. They're selling those PPAs back. And you can see some of those largest miners like Riot here made, I think, 30 million in August for selling energy back. And some people will say, well, damn, those Bitcoin miners, they're charging us out the ass and they're ruining the grid. But actually, what they're doing is making it more robust, because they can take that off-peak time and say, hey, we'll mine Bitcoin, but whenever you need it, we'll sell it back. And then we have that capacity online. So I think Bitcoin's doing a beautiful thing for not only the state of Texas, but grids across the world. And having those people say, well, there's a volcano, say in El Salvador, and they're like, hey, we're going to go mine Bitcoin in El Salvador on this volcano. And then by the time that it's more efficient to actually sell it back into the cities, we can create those grids because we have that input cost and we have that sort of volatility control. So on the energy side, I think I want to live in an abundant energy society. I think that's beneficial in terms of GDP, population, furthering all of the good things that come with living on this planet. And I don't think it's something as easy to say, well, like miners are destroying the world. I think miners are these sort of arbitrage people that go in and find those efficiencies and make the most out of inefficiencies and make the most out of them. So again, a very wide topic to cover, but at a TLDR, Quai wants to do the same. We want to come in and use mining as a way to find those inefficiencies, have a way to make a meaningful impact on the grid, stabilize those energy economies, and then do it in a way that's a little more innovative than Bitcoin. When you talk about
Mhm.
I want to say the quote is, 10,000 times more energy efficient than Bitcoin. That's purely just a scale type metric. So on a per transaction basis, the energy cost net may be the same as Bitcoin, but we're processing more transactions, we're finalizing at a faster rate, and we're getting a higher sort of economic finality than Bitcoin would compared to what exists today.
Got it. One other point I'd like to make just on both Bitcoin and Quai, in a similar way to how water finds the path of least resistance, crypto mining will always find the path of lowest cost energy. And so as things like solar and wind and renewables get cheaper and cheaper, we're going to find a larger proportion of those miners flipping over to renewable energies. And actually what you'll find is crypto miners being the, I guess, trailblazers or pioneers of a lot of this zero emission electricity because it's the lowest cost. And so I think that's a really important thing to mention. The one other thing, because you talked about being so much more energy efficient than Bitcoin, let's talk about that for a second, because the amount of economic energy or the amount of electricity cost that goes into Bitcoin is directly proportionate to the security of the network. And so because we have millions or billions of dollars going into these computers that are providing hash power, that's what makes Bitcoin so efficient. So how can you create the same level of security on a network like Quai that has, let's call it 10,000x cheaper fees per transaction?
Right. So economic finality is sort of the angle of security when you talk about the trilemma, because security is hard to define, but you can define it in these terms of saying it would cost X amount to attack the chain. In a proof of stake system, you sort of see that being the subjective finality of the cost to stake the token. And then if you look at a centralized entity, that's sort of when you get into those pie charts of these mining pools control this much hash rate, these staking derivatives control this much proof of stake on the network. And in Bitcoin, actual economic cost to attack it would be the mining rewards plus the fees in a given day. And comparing that to Ethereum, whenever it was proof of work, you would actually see them being relatively the same, but Bitcoin just has a much larger market cap. So the inflation rate, I want to say at about 1% to 2% right now on Bitcoin, is equivalent to roughly 20 to 30 million in block rewards per day. So that is the mission and security going in. So that's the sort of daily economic finality, is that within a day, you'll have the ability to transact up to 20 to 30 million. And it's not as plain as that. It's sort of 20 to 30 million per individual actor. So you can have a bunch of different entities transacting 20 to 30 million dollars. And as long as they're sort of isolated, then you'll get that security. And similar to, in the Ethereum example, I believe there are at one point up to 40 to 50 million in mining revenue a day that was coming out of fees. So that was actually users attributing that to miners and fees, which is better than being in an inflationary model like Bitcoin. So in Quai, the idea over time is that fees would actually be the mining accrual, because we can do more transactions, and you'd get something similar if you're doing 10,000 TPS at 5-cent fees. You would actually get closer to the 40 to 50 million in a day that Ethereum was doing. But Ethereum transactions, whenever they were achieving that daily mining revenue, was actually a $300 to $500 fee per transaction.
Once these block reward emissions become close to zero, is Bitcoin going to have enough transaction revenue to support the needs of miners, right? And so that is really an open question we still have in the crypto spaces. Is Bitcoin going to be able to keep up its economic security once those block rewards get continually slashed every 4 years to near zero?
Yeah, no. So I told myself I wasn't going to talk about drive chains, but I'll talk a little bit about drive chains. Quai itself is sort of adjacent to the idea of these Bitcoin merged mine side chains, which are called drive chains. They're BIP 300 and BIP 301, and they're highly debated in the Bitcoin community right now because it is a core protocol change in Bitcoin, and Bitcoin itself is highly robust. I mean, the last fork, I believe, that will ever be back into Bitcoin was the SegWit in 2017. And again, that was highly debated then and contentious. So for now, that's the hot topic, is how is Bitcoin going to achieve the long-term economic security of the chain as these mining rewards trend to zero? And of course, most people in the Bitcoin community will say fees are going to pay for it. Great. But how much TPS can Bitcoin do? 7. So you're going to have these 7 TPS blocks that have $50,000 fees across this sort of settlement layer that's a store of value. Well, that's not super usable as a currency. And most people are sort of doing these mental gymnastics on how that's going to work out in the long term. And we haven't hit that wall yet, but we will get there. And I think it's going to be interesting in this next 2024 happening. Drive chains introduce a model in which you can create these side chains that have blind merge mining. Oh, wait, where did we talk about merge mining? We talked about that in Quai already. So we're sort of mirroring these properties, but doing it in a new system. But they want to introduce these ways that you can do hash rate escrows that can sort of allow those meme coins, NFTs, and random things on Bitcoin. And again, highly contentious. And I think Bitcoin has already ossified to the point where that won't become in the protocol itself. So, it's become highly disparate for that problematic change potentially. And I have other varying opinions on the actual technical implementation of drive chains, but that is sort of Bitcoin's answer in the actual technical community today. It's not as broad and not as public, but you can kind of see, and I hate myself for giving it attention, but that community, again, is highly in favor of that sort of change. I don't think it'll be adopted. And so what other alternatives do we have? And I think the other alternative is let's use something like Quai, again, thinking from first principles to say, hey, this is a way we can create a new currency, make it scalable, and have that same economic security with higher throughput, have a way to generate those fees, but then also have sustainable currency over time. And again, I don't think Lightning is an answer for Bitcoin right now. It's been a broader failure across people wanting to use it for payments. It's been something that has bootstrapped adoption in other areas for crypto, and people got excited about it. But again, I think we need to look at a way to innovate in that space and bring payments over to a newer system that has fresh ideas. But outside of that, I think Bitcoin's in a little bit of trouble. Proof of stake, again, has its problems. So what are we left with? I think it's a way for Quai to come in and innovate and be a good alternative.
I just want to touch on the reduced emission schedules of Bitcoin over time, because it could be a bit of a blessing and a curse, right? One thing that gave people so much support for Bitcoin, or I guess trust in Bitcoin, is that we know the total supply being 21 million over time. And that's because of these halving cycles every 4 years and the reduced supply that continues to go out into market. We also know the core values of what it means to be money. Obviously, those are kind of portability and divisibility, all these other things that paper currency have, plus being a store of value. And that's where Bitcoin and gold execute. So talk a little bit about Quai's emission schedules. Is there a total cap on the amount of currency? How do you guys work through things like token inflation and having kind of a finite store of value currency that really constitutes what money is?
Another juicy subject. So we're working on this as we speak. And when I say, we've been working on tokenomics for a really long time. And so when we say it to the community, we're working on tokenomics. We're not just trying to split up a pie chart and say this much goes to a foundation, this much goes to miners, this much goes to team nodes. It's not that simple. And especially if we're trying to build money and build a system that is sustainable in the area of currency, we have to really think hard about what we're doing in this area. So I can't speak much to what is final, but I can speak to some of the ideas that we have and where we want to go with this. So we know intrinsically in a proof of work system, there's a way to look at the hash rate, and hash rate is a proxy for growth. And we want to find a way to create this token that is a proxy for that network size and the security itself. And so when we've talked about how we can put that energy cost into a system, mirror that growth, and create a token that is sustainable based off of what's actually being produced and what's being finalized, we want to back into some of those energy numbers. And so we think that Quai can be a good proxy for energy indices. We think it could be a good proxy for the actual usage on the network. And we think it'd be a good proxy for long-term growth of where energy is going as a market. And the sort of native properties in that would be, how do we look at that hash rate? How do we look at the daily users? How do we use those things that are on chain rather than sort of looking off chain for stabilization? And no other chain, I think, has really thought much about that, because you'll see in the Ethereum model, we kind of utilize Circle and we say, hey, Circle's good. They got a bunch of treasury reserves and we're going to use USDC, and it's great. And they kind of dictate what's done. They can sort of blacklist people. They can block transactions. They can freeze accounts, yada, yada. But that's fine. We got stability. It's great. But until SVB happens, and then Circle's reserves are on SVB, and then USDC is then trading at 88 cents rather than $1. So there's no sort of way to always ensure that that oracle or that stability in the stable asset is true. And then also sort of takes us back to things like Terra Luna, which was an absolute disaster, and other sort of ways that we rely on these central entities or these misaligned schemes to create the sort of belief of stability. And for us, we want to explore what stability means. We've seen sort of Brian Armstrong talk about flat coins. He sort of alluded to, what's being done in other spaces for sort of pegging to various indices. We think that Quai can be sort of a backer on what does an energy indice look like, or what does that input cost into Quai look like, and how can we reward miners appropriately for that currency that they're creating? Because ultimately, we see it being a commodity. I can't speak much to the legal, but the US is still figuring that out in many regards. But we see currency like that being digital gold, digital currency being something that is traded in a way that mirrors the actual input cost rather than being something that's hypothecated fiat like a proof of stake system.
Henry Ford's energy-backed currency idea kind of played out in real time. This is an interesting question. I did want to dig a little bit into stablecoins being really one of the first killer apps or killer use cases of cryptocurrency. If we think about Bitcoin, for example, Quai will also be a floating price currency, and it becomes difficult to pay for things in floating price currencies given the obvious inherent volatility. And so stablecoins have created this great kind of niche. However, we're still pegging it to the traditional dollar system, which is inflating at, 4 or 5% a year conservatively. And, the reason we're getting into this crypto space is to avoid the potential yacht apocalypse we're kind of sleepwalking into. So talk about one, I guess, the difficulties of creating some sort of pegged, truly decentralized currency, what you would even peg that to. You kind of alluded to this energy thing. I know people like Arthur Hayes have also created ideas around a Naka dollar that could be, a Bitcoin backed stable dollar. What are some of the inherent difficulties in creating this pegged currency that is decentralized?
Yeah, I mean, it's not possible without utilizing energy. That's the truth. Someone's going to find some derivative or some financial instrument that can arbitrage or take control of the system. I haven't read much into Arthur Hayes' Naka dollar, but even kind of going back to Bitcoin, if he's saying that that's the basket of assets, then that might even be itself lending it to the energy market and the hash rate security in Bitcoin, because Bitcoin is really the largest proxy for that in regards to energy. And you can actually see, so hash rate and security on the network actually follows price in many ways. It's sort of like, how do we put the, right control on how to look at Bitcoin? But the fundamental technology in Bitcoin doesn't make any assumptions about its price or its security. It just kind of operates on this created emission schedule that is halving every 4 years. And we kind of just went with it because we're like, great, scarcity, it's good, disinflation, trending down. And at one point, we won't have any sort of volume because there won't be any reason to, because there's zero inflation and nobody's moving their coins. And again, sort of a different kind of sleepwalking, but again, still very not aware of the potential consequences. So how do we, in a decentralized system, create that stability? Again, I think anything that utilizes off-chain oracles or things that are inherently centralized in nature, like the banking system, like stocks, any sort of bond mechanisms, that is a recipe for disaster as well, because there's centralized counterparty risk that exists off-chain, and bringing that on-chain is immensely difficult. And that also sort of alludes to bridges too, because if you see that same problem with bridges where you're like, I'm hypothecating Ethereum on Solana or some other chain, and then Wormhole gets hacked, well, now all of that Ethereum on Solana just got absolutely nuked. That's the same problem with stablecoins. And so the only thing I think you can really do is utilize what's actually given on chain. And the only way to do it in a blockchain without, again, hypothecating fiat in a proof of stake system and utilizing social consensus is through energy, and is through utilizing that real hash rate put into the network. And that's defined by mathematics.
Wow. Yeah. I mean, look, incredibly ambitious endeavor to create a true energy. I don't want to call it energy backed coin, but in some ways that is what we need as a society, right? I think. So let's close it off here. You guys somewhat famously don't really have a roadmap for development. So talk a little bit about that, on purpose. So talk a little bit about your decision to do that and how you see the growth of Quai over time.
Yes, Chamath Palihapitiya famously said, we are in the arena trying things. So some will work and some won't. We are experimenting on the crypto frontier. We're experimenting on these ideas, and we don't want to rush something to market that is going to fall flat on its face or turn out to be something that is just not really the anticipated outcome for crypto. We, again, want to utilize that last mover advantage, and that comes with building the right tools, building the right team. We're a small startup, so we're aware of our run rate. We're aware of sort of what it takes to build a successful company. And Bitcoin didn't have a roadmap. If you have a roadmap post-launch, that's a centralizing thing, because you can look at sort of Vitalik and he sort of casts his wand and says, here's what Ethereum is going to do. And then everybody just jumps and does it. And again, I don't want to be a figurehead. I don't think anyone on our team wants to be a major figurehead, because we want to create this protocol that it just exists and is like TCP/IP. If you look back in history, the only major change to TCP/IP was IPv6, and that's an even smaller upgrade to a larger protocol that is optional to adopt. And so we want Quai to look like that from a money perspective, and we want to create these tools that are decentralized in nature. We don't want something like Infura to exist on the network and then have that be the choke point for wallets or be the choke point for dApps. We want to create open infra that people can all just permissively leave and join at their own reason. And so, again, I think the roadmap is something that will get us to mainnet and will get us to people using this product. But at the same time, it's crypto, and any form of guarantee and any sort of promise is just, it means nothing, right? Because there's so much changing, there's so much innovation, there's so much to be on top of. And, for the community and for the people that have been in crypto for a long time, it's promises ultimately lead you down a path that can potentially hurt you. So, we very much want to not provide anything direct and just say, hey, we're working on the best thing. And then the code and the actual products will speak for themselves.
Wow. Very well said. Well, by the time this comes out, your testnet 3 will be live, so people will have the opportunity to go test out Quai. Look, I have to say, this is incredibly important what you're doing for the crypto space, and I think it gives me a lot of hope in the crypto ecosystem to see projects like yourselves building, something bigger and more important than profile pictures. So I think what you guys are doing is incredibly important. Cannot wait to follow the development path that you guys take, and we'll be following the project closely. Thanks so much for your time, Alan.
Yeah, thank you, Mike. I appreciate you having me on.
All right, one final disclosure from our legal department. None of the companies featured on this show are paid promotions. This podcast is simply an extension of our diligence process here at Contango. That said, we may eventually invest in some of the projects we cover. Nothing in this show should be considered investment advice. Crypto is risky. Always do your own research and never invest more than you can afford to lose. That's our show. If you like the content, please like and subscribe on whatever podcast platform you use. And don't let the alpha stop now. If you're a crypto investor, researcher, developer, or founder, we would love to meet you. You can apply to our free private alpha group where we host discussions, share opportunities, and connect some of the brightest minds in crypto. You can find more information on our website at contango.digital. Until next time, keep your ears down and alpha up.